Have you ever looked at your grocery bill and just wondered, how did this happen? Well, believe it or not, a conflict happening thousands of miles away can be a big part of the answer. Today, we're going to trace that exact line, that inflation chain, and see how a global conflict can end up hitting you right in the wallet. So let's make this super specific. How can a distant conflict actually change the price of your morning coffee? Or, what you pay at the gas pump? It seems disconnected, right? Well, in this explainer, we're going to connect those dots for you, one step at a time. All right, first up, the geopolitical spark. Look, every chain reaction has to start somewhere, and for the story we're telling today, it all begins with that spark, that moment when tensions that have been bubbling under the surface for a long time in a really important part of the world just ignite. So, for example, when tensions suddenly escalate between, say, Israel and Iran, it's way more than just a headline you scroll past on your phone. See, because this is all happening in a region that is absolutely critical for the world's energy supply, it sends these immediate shockwaves through the entire global economy. That right there, that's our trigger. Okay, so the trigger's been pulled. What's the very first domino that gets knocked over? The one that's most sensitive to this kind of news. 9 times out of 10, it's the price of oil. Let's break down exactly why that is. Okay, to really get this, we need to talk about something called the geopolitical risk premium. Now, this is super important. It's not about an actual shortage of oil happening right now. It's all about the fear of a shortage happening in the future. Traders, big companies, even entire countries, they all start thinking, what if this conflict messes up the supply chains? So they start paying more for oil today just in case it becomes hard to get tomorrow. It's literally the price you pay for uncertainty. And boom, here's what that looks like in the real world. This chart just lays it all out. Look at the price before the conflict. Pretty stable, right? And then afterwards, you see that huge, almost instant jump? That gap you see between those two bars? That's not based on a real supply drop. That is the market, in real time, pricing in all of that fear we were just talking about. All right, but this kind of anxiety doesn't just stay in the oil market. No way. It spills over, it infects the entire financial world. And that triggers this classic, almost predictable reaction from investors. It's called the flight to safety. And this really breaks down the investor mindset when things get scary. It's like a switch flips. On one side, you've got fear taking over. People start selling off what they see as risky, things like stocks. They just want out. But on the other side, you've got this rush towards what feels safe. They start pouring their money into assets that have a reputation for holding their value when everything else is chaotic. And the classic go-to? You guessed it, gold. Because at the end of the day, it all boils down to one simple truth. If there's one thing the market absolutely hates, it's uncertainty. That feeling of not knowing what's going to happen next, it's powerful enough to move billions, even trillions of dollars in the blink of an eye. And here's the proof in the pudding. That money getting pulled out of stocks has to go somewhere, right? Well, it floods into those safe havens like gold. And what happens? The price skyrockets. And you have to remember, that number isn't just a number. It's a real-time measurement of just how anxious the entire global economy is feeling. Okay, let's recap. We've got oil prices shooting up. We've got nervous investors scrambling for safety. But so what? How does all that drama on Wall Street actually affect the rest of us on Main Street? Well, this is where the inflation chain really starts to connect everything. This really walks us through the whole journey, from the oil barrel all the way to your shopping basket. So, step 1, higher fuel costs. We all feel that one first, right? At the gas station. But then, think about step 2. Everything that needs to be shipped, and I mean everything, suddenly costs more. Trucks, ships, planes, their fuel bills go up. That leads to step 3. It now costs companies more to make their products. It doesn't matter if it's a loaf of bread or a brand new phone. And well, you know what comes next. The final step. Those companies aren't just going to eat those costs, they pass them on to us. And that's how we end up with higher prices at the store. And this quote just hits the nail on the head. This isn't just a market problem. It's a kitchen table problem. It's so true. These huge, complex forces don't stay in the world of charts and finance. They land right on our kitchen tables, and they start affecting real family budgets. And why? Because at the end of the day, pretty much every single part of our modern economy runs on energy. So let's step back for a second and look at the big picture. Why does this all matter? I mean, why is it so important to understand this chain reaction? Well, it's because this whole thing has massive consequences, both on a global scale and on a really, really personal one. Okay, so here it is, the whole domino effect in a nutshell. First, a regional conflict kicks up a ton of uncertainty. That uncertainty, that fear, makes oil prices and safe haven assets like gold spike. Then, those higher energy costs work their way through the entire economy and, boom, the final domino falls, widespread inflation that affects every single one of us. But here's something that is so important to remember. This economic pain, it is not felt equally around the world. Not even close. For developing nations that have to import most of their energy, countries like India or Pakistan, a sudden spike in oil prices can be absolutely devastating. It can cripple government budgets and hit ordinary people incredibly hard. As you can see here, for economies that are already a bit fragile, the consequences are just so much more severe. And all of this really leads us to one final big question. When a conflict ignites in just one corner of the globe, the economic tremors are felt by all of us, everywhere. It's just a powerful and maybe a little scary reminder that in the hyper-connected world we live in today, the true price of instability is something we all